All right, welcome to another deep dive. We are diving into the world of real estate investing today. I know a lot of you are interested in this topic, so we're going to be breaking down a YouTube video called 6 Things to Look For in Real Estate.
Yeah, and the expert in this video, they really don't sugarcoat anything.
Oh, really?
Yeah, so that's what makes this deep dive pretty exciting, I think. They share their hard-won wisdom, starting with this like fundamental thing that they swear by, and that's cash flow.
Cash flow.
Yeah, they literally say in the video, if it doesn't cash flow positive, I never buy it, period. End of story.
That's a pretty bold statement.
Yeah.
It really highlights how important positive cash flow is to real estate investing, right?
Yeah.
So for the people out there who are just starting out, can you explain what cash flow actually means in this context?
Oh, for sure. Cash flow is basically the money you have left over each month after you've subtracted all of your expenses from the rent that you collect. So that means like your mortgage payments, your insurance, property taxes, maintenance, all that stuff.
Hmm.
If that number is positive, that's positive cash flow.
Right.
That's the holy grail. That's what you want.
So it's not just about like how much rent you can charge.
No, it's definitely not.
It's also, like you said, subtracting all those expenses, making sure you have money coming in every month.
Right, exactly.
Now, this expert, it's not just about, short-term gains for them. They also emphasize how important appreciation is for building that long-term wealth.
Mm-hmm.
So could you break down why appreciation is so key in real estate investing?
Sure, you're not just buying a property to just get that monthly rental income, right? You're also investing in something that will hopefully increase in value over time. That increase is appreciation.
Gotcha.
And that's how people build significant wealth through real estate investing.
But how can you even tell if a property has good appreciation potential? It seems like there's so many different factors that go into that.
Yeah, that's a good point. The expert actually cautions against chasing, areas with those temporary job booms. They give a couple of examples.
Plates.
Like North Dakota's energy sector, for a while that was booming. And Boise, Idaho, I mean, so many people moved there from California during the pandemic.
I've heard about that, yeah.
So while those markets may seem really hot in the short term, like long-term appreciation, that relies on, well, long-term economic trends, not just,
Not just hype.
hype. Yeah, exactly. You got it.
So it's all about doing your research, understanding the bigger picture, right?
Yeah, and then the expert talks about a really interesting tax benefit
Okay.
that can make real estate investing even better.
Depreciation, that sounds complicated.
Well, it's actually pretty simple. Depreciation is basically you get to deduct a portion of the property's value from your taxes each year.
Okay.
So that lowers your tax burden. It's basically the government acknowledging that your property's value is going down over time, right? It's wearing out.
It's wearing down, so they're cutting you some slack.
Right.
So is depreciation like the same for every kind of property?
It's a good question, and it's not the same. The expert uses this example. Say you have a $270,000 single-family home and then a $270,000 four-unit apartment building, same price.
Okay.
But the depreciation benefits, those can be really different. So for the single-family home, you spread out that depreciation over 27 years. But if you have the fourplex, the multi-unit, you could deduct a much larger amount right away.
Oh, wow.
So that means you could even have like tax-free cash flow for a few years.
Whoa. Now that's a huge difference. Makes the multifamily look way more appealing tax-wise.
Right. It's something to think about. And speaking of taxes, the expert mentions this strategy, a 1031 exchange.
A 1031 exchange, what's that?
So this is like a really cool tool that lets you not pay capital gains taxes when you sell a property if you take those earnings and reinvest it into a similar property.
Interesting. So you hit pause on the tax bill?
You got it. Let the profits keep growing tax deferred.
Okay, so you're not giving a chunk of your money to the IRS. You can reinvest it.
Exactly. The expert shares this funny anecdote about a friend who sold a storage property for $8 million.
$8 million.
Yeah, and they used a 1031 exchange to dodge a huge tax bill.
Pretty smart.
Yeah, they rolled that money into a new investment and kept building their wealth. It's all about being savvy.
Definitely. And then the expert goes on to talk about financing and refinancing
Mm-hmm.
and how they can boost your returns, which makes sense. I mean,
Yeah.
everyone knows that.
Well, they actually have this personal story about refinancing a $4 million property.
4 million?
$4 million, yeah, that they co-owned with a partner. Through a cash-out refi, they were able to pull out a ton of equity, which they could then use to invest in other things.
So you're saying that refinancing is more than just getting a lower interest rate?
Definitely. It's a strategic tool to free up capital for new investments. Now, here's where it gets interesting.
Okay.
The expert says that his least favorite way to make money in real estate is selling.
Really? That's so surprising.
it kind of goes against what everyone thinks, right? Like that's the classic real estate move. You buy it, you fix it up, you sell it for a profit.
Right, exactly.
But the expert makes this really good point. When you sell,
You lose that.
you're losing that consistent cash flowing asset, right?
That steady income.
Exactly.
And you might be triggering capital gains taxes, missing out on future appreciation.
Exactly.
Wow, so they're advocating for just holding on to those properties.
Yeah, more of a long-term approach, buy and hold,
Interesting.
prioritizing the long term, yeah.
Okay, so just to recap quickly, the main principles we've talked about so far. We have the importance of positive cash flow, the power of appreciation,
Yep.
the benefits of depreciation, 1031 exchanges, and how to use financing and refinancing to your advantage.
Yeah, those are like the fundamentals.
That's a great foundation for real estate investing.
It is, but we're not done yet. There's more to uncover in this expert's wisdom. All right, so we're back, and we're going to build on those core principles that we just talked about. Now let's jump into the exciting world of finding good deals. This is where the rubber meets the road, right?
Yeah, so we got the basics down, but where do we even start looking for these amazing properties?
That's the big question. The expert doesn't really give a step-by-step guide in this video, but they do mention some interesting niches based on what they've had success with. Remember, they talked about storage units, retail spaces, and RV parks.
Yeah, those are some pretty interesting suggestions. They don't exactly scream traditional real estate, you know?
Exactly, and they can be surprisingly profitable. It's all about finding those opportunities that everyone else is overlooking, stepping outside of the box.
So how do we train ourselves to spot those hidden gem deals? What are some telltale signs?
Well, it always comes back to cash flow. That's like your North Star, right? When you're evaluating any potential deal, you're looking for a property where the potential rental income is a lot higher than the expenses. But it goes beyond just the numbers. It's also about understanding the market, and noticing any trends that are popping up.
What do you mean by understanding the market? Give me an example.
Sure. Let's say you're thinking about buying a rental property in a neighborhood that's becoming gentrified. It's getting more and more popular.
Mm-hmm.
At first glance, it might seem like a great opportunity for appreciation, but what if those rising property values lead to higher property taxes, and that ends up pushing out the current residents and making it tough to find long-term tenants?
Oh, that's a good point.
Yeah, you could wind up with a bunch of vacancies and a lot more expenses than you planned for.
Yeah, that makes sense. It's not just about the numbers on paper.
Nope.
It's about looking at the big picture, anticipating any challenges down the road.
Exactly. And remember how the expert talked about those common mistakes, like not investing enough initially and selling too soon?
Yeah.
Those are some really good things to remember when you're analyzing a deal.
Okay, so we're keeping cash flow top of mind. We're paying attention to market trends. We're thinking long term. But where do we actually begin our search? Do we just drive around looking for rent signs?
You could, but in this market, it's probably better to, use technology and tap into your network. There are so many online real estate platforms out there.
Yeah, there are tons.
And local real estate meetups, even connecting with wholesalers who, specialize in finding those off-market deals.
Oh, that's a good idea.
Yeah, this can be great resources.
I hadn't even considered networking. How can building those relationships help us find good deals?
Well, when you build relationships with other investors, real estate agents, even contractors, you can get access to opportunities that never even make it to the public market. Sometimes the best deals come from who you know, not just what you know.
That's a great point.
Right, so we're identifying those potential niches, we're prioritizing cash flow, we're building our network, we're analyzing market trends. What else should we be thinking about when we're looking at a deal? This is where due diligence comes in. Don't just jump at the first thing that looks good. You got to inspect the property, review all the financials, research the neighborhood, and really think about any potential problems or risks.
That sounds like a lot of work.
Yeah, it is. But real estate investing, it's not a get-rich-quick scheme. It takes effort, knowledge, and a willingness to learn and adapt. And speaking of learning and adapting, it's important to remember that this is just one expert's opinion. There are so many different strategies and approaches out there. The key is to find what works best for you and your investment goals.
Okay, so let's recap what we've learned so far about finding those real estate deals.
All right, so we need to find those potentially profitable niches that fit our interests and our risk tolerance, right?
Right.
We need to make sure that cash flow is a top priority. It's a key indicator of a good investment opportunity.
And we need to use technology and networking to find those hidden gems, maybe even wholesalers too.
We need to do our due diligence, right? Really get to know the property, the finances, and the whole neighborhood.
And be ready to negotiate to get the best price for our long-term goals.
Exactly. Wow, we're already starting to build our real estate investing toolkit.
We are, but we're not done yet. There's one more important piece we need to talk about.
Yeah, one that can really take your real estate game to the next level.
Okay, I'm all ears. What is this final piece?
It's the art of adding value to your properties.
All right, we're back for the final part of our deep dive into real estate investing. We've covered a lot of ground, from the basics of cash flow and appreciation to finding those hidden gem deals. Now let's talk about taking it to the next level.
Adding value to your properties. This is how you turn a good investment into a great one. It's about being proactive, going beyond just keeping the property in good shape to actually making it more valuable and increasing its earning potential.
So it's more than just like painting the walls and calling it a day.
Exactly. It's all about making strategic improvements that fit with your investment strategy. Let's say you have a rental property that's a little outdated. Instead of just accepting average rents, you could modernize the kitchen and bathrooms, upgrade the appliances, boost the curb appeal.
Okay, but those sound like pretty basic renovations. How do those actually add significant value?
It's all about the reason behind those upgrades. You're not just fixing things, you're strategically choosing improvements that will attract better tenants who are willing to pay more in rent.
So if you're targeting young professionals, you might focus on making it look modern and sleek. But if you're aiming for families, you'd make it more functional and comfortable.
Exactly. It's all about tailoring your improvements to the specific needs of your ideal tenants. And this applies whether you're planning to rent it out long term or sell it eventually.
So how does this value add strategy work when you're planning to sell a property?
You got to think like a buyer. What features will make them love the place and be willing to shell out top dollar? It might be finishing the basement to add more living space, building a deck, or even creating an in-law suite to attract those multi-generational families.
So it's not just about making it pretty, it's about adding those things that buyers really want.
Right. And even small things can make a big difference. Fresh landscaping, new light fixtures, staging the interior, all those little touches can create that wow factor that makes your property stand out.
It's like putting the finishing touches on a masterpiece. But we've been talking about physical improvements. Are there other ways to add value without, renovations and all that?
Definitely. Remember our focus on cash flow. You can also add value by increasing the property's income. Like, let's say you buy a multi-unit building with below market rents. You could slowly raise the rents to match the going rate in the area, and bam, you've instantly increased the property's income.
That's a great way to add value without even picking up a hammer.
Exactly. And don't forget about cutting costs, negotiating better deals with contractors, or making energy efficient upgrades to lower utility bills. That all adds up.
So adding value is about looking at the whole picture, the physical appeal, the right tenants, and getting those finances in order.
Yeah, you got it. But it's not just about making as much money as possible. It's about creating a good situation for yourself and the people living in or owning the property. At the end of the day, real estate is all about people and their spaces.
This deep dive has been amazing. We've gone through so much about real estate investing. What's the one thing you want our listeners to remember? The most important takeaway?
Here's something to think about. How can you go beyond just adding value and tap into the power of what's called forced appreciation?
Forced appreciation. What's that?
It's about making those really strategic improvements that increase a property's value even more than the natural market appreciation. Think major renovations, additions, even rezoning to allow for more units.
So it's about being proactive and creating that value yourself instead of just waiting around for the market to do its thing.
Exactly. It's definitely a more advanced strategy, but it can lead to big returns for those who are willing to take the risk.
That's a great note to end on. Something for our listeners to explore as they continue their real estate journey.
Remember, the world of real estate is always changing. Stay curious, keep learning, and don't be afraid to roll up your sleeves and get involved.
And that's it for our real estate investing deep dives. We hope you enjoyed it and learned a lot. Until next time, happy investing.